Hey everyone, welcome back to Corporate Decoder, the place where we uncover business secrets, and guess what, we have a new Linde plc report for you. It seems like this quarter brought some interesting moves, and we're going to decode all of it for you. Linde plc is back with their quarterly report, and we've got the scoop on their financial performance risks and strategic plays that could shape their future. Let's dive straight into the numbers, starting with the consolidated statement of income. Total sales for the quarter ended June 30, 25 hit $84.95 million. This is a solid 3% increase from $87 million in the same period last year. This growth was mainly thanks to better pricing, which added about 2% to sales, and a 1% boost from cost pass-through, meaning they're effectively billing customers for energy cost changes. Acquisitions also contributed about 1% to this sales growth. Now let's talk about profit operating. Profit for the quarter was $2,354 million, a really healthy 8% jump from last year. This increase was mainly driven by their smart pricing strategies, productivity improvements, and they managed to overcome rising costs and lower volumes. As a percentage of sales, operating profit was a strong 27.7%. And what about earnings per share? The diluted earnings per share was $3.73, up 8% from $3.44 in the same quarter last year. This boost is thanks to that higher profit and a slight decrease in the total number of shares outstanding, which is always a good sign for shareholders. The company also highlights adjusted operating profit, which strips out certain merger-related costs and charges. This adjusted profit came in at $2,556 million, a 6% increase from the prior year, and a slightly better margin of 30.1%. This just shows that their core business is performing really well, even after accounting for those special items. Looking at cash flow, things are also busy. Investing activities used $2,826 million for the first half of the year, which is up from $2,311 million last year. A big chunk of this $2,527 million went into capital expenditures, mostly for new plants and equipment to support their growth. That's nearly $350 million more than last year, so they're definitely putting money into growing the business for the future, and they've got a healthy backlog of projects worth about $7.1 billion. On the financing side, they used $1,754 million this period, compared to $1,476 million last year. They've been quite active in managing their debt, issuing new notes and also repaying some existing ones. A significant part of their financing has also gone into share buybacks. They spent over $2.2 billion buying back their own shares in the first half of the year, showing confidence in their stock. Non-controlling interests, which represents the portion of ownership in their subsidiaries not owned by Linde plc itself, amounted to $40 million in the quarter. This is mainly tied to their operations in the Asia-Pacific region, especially China. Let's break down performance by region. The Americas segment showed strong sales growth of 4% thanks to solid pricing and business from chemicals and energy markets. Profit here also grew about 4%. In the EM region, sales were up 3% for the quarter, driven by pricing and currency effects like a stronger euro. However, volume saw a dip mainly in metals and mining and manufacturing. Profit in M was impressive, up 11% for the quarter, showing they're managing costs well despite those volume challenges. The APAC segment sales were actually flat for the quarter, but down about 2% year to date. Acquisitions helped a bit, but challenges in manufacturing volumes and currency impacts like a weaker Korean won hurt them a bit. Still, operating profit managed to creep up by 3% for the quarter thanks to good productivity. Their engineering division saw a modest 1% sales increase for the quarter, mostly due to currency, but operating profit dipped by 6%. This is something to keep an eye on, as it might indicate some project timing issues or increased costs impacting their specialized engineering business. The other segment, which includes corporate costs and smaller businesses like Linde Advanced Material Technologies, saw sales decrease by 2%. Operating profit here also declined by 18% for the quarter and a significant 88% year to date. Now, regarding liquidity, Linde remains in a strong position with over $4.7 billion in cash and cash equivalents. They also have access to significant credit lines and maintain strong relationships with credit rating agencies, signaling financial stability. The company also flags that its underlying business is performing well when you exclude those one-off merger-related costs. Adjusted metrics consistently show growth and healthy margins, reinforcing the strength of their core operation. It's also worth noting their financial guarantees for various subsidiary debt issuances, which provide financial backing and stability across their global operations. These guarantees are a testament to their integrated financial management. So what's my take on Linde's latest report? Linde is showing resilience and strategic execution, a 6% rise in adjusted earnings per share and solid operating profit growth in a challenging economic environment is impressive. They're investing in future growth through capital expenditures and thoughtfully managing their share buybacks, indicating confidence in their value. The key strength here is their ability to drive pricing and productivity, which are crucial in managing inflation and volume fluctuations. Diversification across geographies and industries acts as a natural hedge against regional slowdowns. A couple of points to watch are the slight volume declines in some segments and the profit dip in the engineering division. While currency and pricing are helping to offset these, Linde needs to keep a close eye on maintaining volume growth and ensuring their specialized divisions remain profitable. The ongoing legal matters, especially with Risk Alliance, require continuous monitoring, though the company seems prepared to handle them. Overall, Linde plc is navigating market complexities effectively. They're showing solid operational performance and financial discipline, positioning them well for future opportunities and challenges. Alright, that's our look into Linde plc's latest financial report. What are your thoughts on their performance and future outlook? Let me know in the comments below. If you found this breakdown helpful, give it a thumbs up and make sure to subscribe for more deep dives. Oh, and don't forget to join our Discord community, linked in the description, for more exclusive content and discussions. Thanks for tuning in to Corporate Decoder. See you next time.